Good morning, everyone, and welcome to MPAC's second special event for Ontario Realtors. We have over 1,500 people registered for this morning session. On behalf of MPAC, we'd like to thank you for spending your morning with us. We're really excited about what we have planned for you. With me on camera is MPAC's President and CAO, Nicole McNeill.
Good morning, Chris. Good morning, everyone.
And thank you for joining us, Nicole. It's a pleasure to have you today. I know we're going to have some great conversations about MPAC's property insights to start things off. And a little later, I'll be joined by Sean Cathcart from the Canadian Real Estate Association and Jason Mercer from the Toronto Regional Real Estate Board. They're with us today to share their analysis on what's happening in the real estate market, a topic I know that's top of mind for all of us. Also note, the session's being recorded and we will share the recording and PowerPoint slide handouts with you later on this week. And if you have any questions during the presentation, please submit them by clicking on the question mark on the right-hand side of the GoToWebinar window. Our team's monitoring the questions in the background, and at the end of the session, we will spend 5 or 10 minutes going through. Hopefully we'll have some good themed questions. I'd imagine some of them will be quite common. So Nicole, let's start with talking about Ontario's property market.
Yes, excellent. Well, as you know, Chris, we are monitoring what's happening with property very closely, especially through the pandemic, as we've all experienced some significant changes to the way we live and work. I suspect that everyone is here today because you're passionate about property, just like we are. As realtors, part of your job is to understand how property values change over time and analyze what you observe to predict where things are going. And Chris, as you know, we can help with that. Ontario has over 5.5 million properties with a total value of $3 trillion. We assess and classify them from single-family homes to commercial buildings, industrial factories, and farmland. But we don't just assess properties every few years. We work to keep our property inventory up to date every day and evaluate new properties and changes to existing ones as they happen. We also monitor the real estate market daily and maintain real-time market values for residential properties across the province. The last 2 years have been an unprecedented time for all of us passionate about property and real estate. And I don't have to tell you that values have increased dramatically, especially in the residential property sector. Chris, as you and I know, one of the biggest misconceptions is that big jumps in market values create fear that those increases will translate into higher taxes for property owners.
Yeah, it's a big reason why we're here today, Nicole. And I think it's worth pausing for a minute on what you just said. Realtor education is a big part of our real estate team's strategy. And realtors are often on the front lines answering questions from their clients who are often first-time home buyers. And the questions are often about, hey, what are these property taxes? How are they calculated? Our real estate team talks with realtors all the time at conferences and training sessions and webinars and takes telephone calls. And we get the same questions over and over. So today, I'm hoping to talk to you and have you answer some of the most common questions we get about property assessments in Ontario. And I don't know if you know this, but according to CREA's website, there are over 100,000 realtors in Ontario. So the profession's bigger than the entire Canadian Armed Forces. So if we can, it's a big number. And if we can educate the realtors and provide them accurate information on property assessment and they can answer questions, just think about, how many property owners they can educate on our day-to-day business. So with that, are you ready to take some questions?
All right, is it rapid fire or how are we doing this?
I'll try to slow it down a little. Okay, so the first question we get all the time is why are MPAC's property assessments so low?
That's an easy one. They're not low because they're not meant to reflect the current market. MPAC property assessments are based on a date and time set by the Ontario government. And the last time we reassessed the entire property database in Ontario, we did it based on a valuation date of Jan 1, 2016. So that's what people see when they look at our current value assessment. It's back in time as January 1, 2016.
Right. So for those of you in attendance, when you're looking at the assessments in public records or Geo Warehouse, they're low because they're based on a January 1st, 2016 market value estimate. Now, even though the assessments are based on a historical date, we do have an AVM product which estimates what a property is worth today.
That's right, Chris. And it's important to understand that we've assessed values that municipalities use for property tax purposes. And that gets updated every few years, and that's the Jan 1, 2016 date. But we also have, as you mentioned, our automated valuation model product that provides real-time market values that are used by a variety of different people, financial institutions, mortgage insurers, and of course, all of you, realtors.
Yeah. Yeah, for sure. And many of you on the line are familiar with the product. And for those of you who aren't, our team has developed an AVM webinar that's customized for realtors. And that's available to you anytime as well. All right, next question. When will MPAC do a reassessment with a more current valuation date?
Chris, that's a question that's on a lot of people's minds. And the answer is we don't know yet. We were scheduled to do a full reassessment in 2020, and that was paused due to the pandemic. The Ontario government is still considering the timeline for the next assessment update as part of its pandemic recovery efforts. And once the government announces a new date, we'll communicate that to realtors and property owners all across Ontario.
Great. Okay, so you probably know what my last question will be, and I actually got this call last week from a friend of mine, a realtor, Gary Phillips, up in Parry Sound area. Again, he's answering these questions to his clients all the time, but here we go. So the market has changed so much since the last time property assessments were updated, and everyone's worried about what will happen when MPAC does a reassessment, and there will be a huge jump in value.
We hear this a lot, Chris, you know this, and I know a lot of people will think that if their property value doubles, their property taxes will double. The good news is, as you and I know, that that is just not true. If you own a house that's gone up in value at the same rate as others in your municipality, and your municipality's budget stays the same, you're likely not going to see any impact after reassessment.
Right. And what if your house went up in value, but not as much as the average home in your municipality?
So that's a good question, because in that case, you could actually see a decrease in your taxes. Again, if your municipality's budget stays the same. While it's more the exception than the norm, there are times when a reassessment could result in increased taxes. That can happen if your home value goes up more than the average home in your municipality. So for example, if you live in one of those hot neighborhoods, for example, that just might happen.
So what's the most important thing people need to take away and share with their clients?
Because I think the most important thing is this: when MPAC updates property values, unless your home increased or decreased in value more than the average, you're likely not going to see an impact on your taxes. Even if your home's value has doubled or tripled, which we know many markets have, you should not expect a huge tax increase.
Excellent.
Now, before, Chris, I actually want to ask you a question.
Yep.
You know, one of the things that I often hear from whether it be someone buying a home, selling a home, and often realtors, is what happens when someone's property sells? What does that do to their property taxes?
Right. Great question, Nicole. Yeah, we do get this question a lot. So people think that, okay, my assessment is so low, I just sold or bought my home, MPAC's going to come and assess it at what I just paid for it. So as you stated earlier, that's simply not true. The assessments are still based on a January 1st, 2016 value. So that sale might be used in a future analysis when we know what the new valuation date is, when the province announces when the next reassessment will be. But at this point in time, we're only using sales that represent a 2016 market value. So great question. And there's also one last personal question I get a lot from realtors. And yes, I am related to the infamous Jack Fusco. He is my crazy uncle that has been a Royal LePage recruiter for many, many years. So He's not on the line because he's in Cuba, but I do get that question almost everywhere I go in the GTA.
So the rumors are true.
The rumors are true. Okay, great. So now let's get into MPAC's property market insights, Nicole.
Yeah, this is an exciting topic for us because MPAC is uniquely positioned to analyze Ontario's property market because we have a complete picture of all those 5.5 million properties I mentioned earlier. And that includes things like airports, community centers, racetracks. We hold the most detailed set of data about each one of these properties. And many of you likely know that we keep in-depth structural details and building permit data on residential, commercial, industrial, and investment properties. And through our AVM products that we spoke about a few minutes ago, which you have access to on Property Line, you can find out what a property is worth today. And we can also tell you the market value for every residential property in Ontario at any point in time over the last 20 years. Our property data helps businesses make sound decisions, like when it comes to lending and underwriting or planning for infrastructure purposes. We also know that you rely on our assessments, property data, and real-time values to assist you with your professional analysis and service to your clients when they're considering buying or selling a property. As realtors, you put property buyers and owners at the center of what you do. At MPAC, we've made it a priority to help property owners understand the value of what is often the most significant asset on their balance sheet. We also want all Ontarians to benefit from the value that we can derive from our property market data. We're turning our one-of-a-kind property database into insights to help us all understand more about how we live and work. And we're committed to delivering more of these insights than ever before. We already paint a picture of how Ontario's property market changes when we publish an annual set of insights on construction activity, what types of new properties and changes we assessed and where. And we'll continue to publish an annual report on building permit activity across the province and highlight the trends we identify. So Chris, as you know, every year, we're going to talk about some building permits now, that we receive about 300,000 building permits from municipalities across Ontario. Those are essential triggers for us to review changes to property, and permit information is a valuable input into our assessments. They can also tell us a lot about what's happening with property in general across the province. What we've seen since the pandemic started is a significant increase in home improvement building permits. These are for swimming pools, renovations and additions, sheds, garages, and decks. I'm sure you've seen the increase in these improvements firsthand as people have changed the way they live and play at home during the pandemic. Last year alone, nearly 70,000 home improvement permits were issued. That's up another 18% from 2020. Now here's a look at a trend that we've identified, and I'm sure that this comes as no surprise to you. Home improvements have taken off during the pandemic. This year, before the pandemic started, we saw a modest 5% increase in home improvements, building permits, and interestingly, that was after seeing an overall decline in 2018. You can see on the graph here the big jump in permits in 2020, a 15% increase with over 7,000 more permits being issued. Not surprisingly, swimming pools were a significant factor in that jump. As we then navigated into the second year of the pandemic, people's desire to invest in their homes didn't slow down. As I mentioned, home improvements went up 18% in 2021. Now, I really like this slide because it's a beautiful pool, and I really love this this shed that people are putting on their properties. So, as we all know, pools were still popular. It was up 33% from 2020, and Ottawa led again the province for the province with the most pool permits. But the other trend that we saw in 2021 was a significant increase in residential sheds. As you likely know, not all sheds require a building permit. So here we're talking about large, stylish sheds that could serve as separate living or workspace or even a backyard getaway. We're watching these types of trends closely because they may give us some insight into how people are changing the way they use their homes due to the pandemic. Working from home, less travel, and just more time spent at home could all be factors here. Now, as I look at the region here, the last trend I want to highlight is where we're seeing growth across the province. We're looking at total residential building permits on this slide, including new homes and improvements to existing homes. Last year's most significant growth was in the GTA, where over 37,000 permits were issued. The Greater Golden Horseshoe and Eastern Ontario followed with over 20,000 permits issued. And Northwest Ontario issued almost 1,700 permits last year, making it the region with the lowest activity.
That's great information, Nicole. Thank you. Probably a lot of people on the line are wondering where they can find our property market insights if they want to learn more about this.
It's a great question. We publish all of our data on MPAC.ca, and we have a lot more detailed breakdowns on building permit insights by region available there as well. So as well, realtors have access to the building permit history, as I mentioned, on a property through our property line reports.
That's right, Nicole. And again, if you're not familiar with how to access it, you can sign up for one of our webinars and we'll get into more details on the tools and reports available to you. Well, Nicole, thank you very much for joining us this morning to answer some of the most frequently asked questions our team gets about assessments and for sharing MPAC's property market insights on building permits. Now I'd like to ask our next presenters, Sean and Jason, to join us on screen.
Thank you, Chris, and thank you everyone for having me.
It was a pleasure, my pleasure. Sean, Jason, I'd like to thank you both for being here today. I'd also like to say on behalf of MPAC that we really value the collaborative relationships we've developed with both of your organizations over the years. And we value opportunities like this to combine our property and market insights in important discussions about our communities and what's happening across Ontario. So now we'll move on to talking about Ontario's real estate market. Sean is the Canadian Real Estate Association's senior economist. He manages the production and distribution of CREA's national resale housing database. He's also in charge of market analysis, providing housing market intelligence and analytical materials to boards, associations, members, media, government, and other real estate industry stakeholders. So Sean's going to focus his analysis on factors influencing Ontario's market and what he's seeing across the province. We also have Jason from the Toronto Regional Real Estate Boards. He's the Chief Market Analyst and Director of Service Channels. He leads the market analysis program and oversees TRREB's MLS Services Department and delivery of information and data products to TRREB membership. Jason's going to focus his insights on the GTA market today. So Sean, I'll hand things over to you first. What can you tell us about all the factors that are influencing the housing market now, and where do you see things heading?
Sure, thanks, Chris. And good morning, everyone. Thanks for having me. You know, for anyone that's seen me do these things before, these can kind of be a little bit non sequitur. I often like to just put charts up that I think are interesting and then try to stitch a story together from it. I don't use speaking notes. So sometimes I have to go to the next slide to remember what I was talking about. And that's particularly true today because I did do some rearranging of things in advance of this because things are changing right now. And the main factor being the cost of borrowing money is going to be the big one. So I've got a piece in there on that. I don't want to waste any time. I'm going to share my screen and you guys can tell me if you can see it. Can I get somebody to tell me if they can see my slideshow?
I can see it, Sean.
Oh, okay, good. Oh dear. All good. All right. So I wanted to start off at a very high level. I think many of you probably saw the Scotiabank report out that came, I think last year and a half ago, that was saying, you know, Canada has the lowest number of housing units in the overall stock per capita of any G7 country. And it was like, that's a good place to start this conversation. But you need to go a lot deeper than that. So what you're looking at now is a chart of Canada's population broken out by age group. So it's a histogram from 50 years ago, when the median age of our country was 25. And so half the population was under 25. The baby boomers were on the scene. They were, you know, making music and fashion and doing all kinds of drugs, but they weren't really in this common home ownership space yet, that middle-age adulthood space. And so I'm just going to animate this right now and just have a look at it and tell me if you can see a secular sort of filling up of that space that is not a cycle. It's something we've only gone into one time in history, and we're in right now. So watch this: 1980, 1990, 2000, 2010, 2021. Look at the inflow into this homeownership space from the millennials and Gen Z. 5 million people a year, twice as many as the younger baby boomers, who for a long time were the dominant population group in Canada. And look at the outflow. These are members of what we call the silent generation, people who were born during the Great Depression and World War II, which was sort of a bit of a double whammy for birth rates. And if you're waiting for this big wave of population to exit out of home ownership and give all these great family homes up, you're still going to be waiting a long time. I've been hearing that story for 15 years, and we've probably still got another 10 or 20 until it actually starts to play out in a big way. So what you've got is a massive amount of people, the boomers, Gen Xers, and millennials, all in middle age at the same time. So does our demography have a midlife crisis? So that's sort of the working title for this presentation that I'm sort of working on here. I think we do. And so the question is, what are we building? Oopsie, sorry about that. So this is housing unit completions from CMHC. I've made everything blue for right now. So you got the singles, semis, rows, and apartments in there. But if you make it all blue, that the overall area is just the number of units. And the reason why I do that is because we often hear about we're building enough units, or this is how many units we're building. But if you're talking about housing people, then you also need to consider square footage and bedrooms and bathrooms, right? And so, yeah, we might be building at a record level, slightly higher than 20 years ago, even though the population is going through the roof. But if you put some color on this, what you'll see is that it's increasingly apartment units. And I know that Jason can probably talk to this in Toronto and in Vancouver, when you're like almost more than 90% of completions are these small condos. Now, meanwhile, while you've got a population, as I've just showed you, that is just increasingly like forming households and going into middle age, and maybe that's not the right thing, even though it's maybe the easier one to build. This is your missing middle, your traditional missing middle, semis and rows. As missing as it was when the term was coined 10 plus years ago. I remember going to a TRREB event like 10 years ago where it was like the missing middle is the future. And you know, if we could get a lot more of that gray and orange and maybe some bigger apartments, we could start to solve this problem. Maybe we're not going to build big single detached homes anymore, and that's fine. But you know, we talk about rezoning a lot, but you know, most of the places that are zoned for single family right now have single family homes on them and families that live in them. So you can rezone it all day long, but it's going to be a real challenge if you're doing infill development to get enough of these things to actually house the people that, you know, as you all know, the ones that are walking away disappointed because they didn't win that multiple offer. And so what happens is, you know, when you're not building enough of what people want, it gets all absorbed out of that existing inventory. This is Ontario active residential listings at the end of the month over 25 years. And you can see, I'm just going to move my little controller here, and then, you know, things were pretty stable, pretty balanced, quite frankly, at around 65,000 listings at the end of the month for a good decade, heading up to about 2015. And then, of course, you know, as anyone that's in the GTA and the greater Golden Horseshoe will know that that region of the country got way ahead of this trend and sort of maybe overshot a little bit. And then we got fair housing and the stress test that sort of put things on pause again for a couple of years. But if you look at where we are now, and that started way before COVID, you know, are we starting to recover a little bit? Maybe, but this is a really, really low number of inventory. And it's a huge problem for people out there buying homes. It's the reason why prices have been doing what they're doing. Because the sales number, this is Ontario home sales, on an annualized basis, we're still like right now in the sort of 275 zone, maybe dropping back down recently to about the 250 zone, and that's close to where our forecast is for this year. We'll see how that plays out, and I've got another bit of information about that in a minute, that we might be revising that one down, I think. But still very strong historically. So you've got a almost record low of supply and a very strong amount of sales. You divide one by the other, you get the number of months of inventory, and we are way down here, you know, one, less than one. Once you get under one, you're in weeks of inventory. And but I think what's interesting about the months of inventory in somewhere like Ontario is that you can see the cycles over time, but there's also a secular element to it, that going back 25 years, that every time we go through one of these cycles, it's tighter than the last one. And so it raises the question, to what degree are we going to go back to normal ever if you've been going in one direction for 25 years? Something to think about. So of course, prices, this is the MLS Home Price Index, Ontario Composite, which has almost all of Ontario in it now. I think we're missing a couple markets. And what you can see is obviously things have gone crazy in the COVID era, but what I would highlight as something to know right now is, in terms of new information for all of you, would be the percent change from January to February was the biggest one ever. And then from February to March was actually kind of small. And so if we break this out as a heat map, it's hard to put all of the markets in Ontario on a chart. It's a plate of spaghetti, as we call it. So I'm going to show you a heat map. Now this is the year-over-year change in every market in Ontario for prices, February versus March. And so if you're blue, that means that things slowed down. And there's a lot of blue in Ontario, right? And so we had a lot of people taking advantage of mortgage rates that they had sort of that they had locked in. And there was a bit of a flurry of activity in February, and then everything slowed way down in March. And that's before some of these big interest rate increases, right? Because the big 5-year rate increase happened in April. And I'm going to show you some data about what might be coming next. So we are slowing down on the price side big time. Of course, you don't go from plus 35% to 0 overnight. You go from plus 35 to plus 30. And then to plus 25, and then to plus 23. And so we'll see how this plays out. Now, this is the average discounted contract 5-year mortgage rate that we have. You know, the government, when they had talked about linking the stress test to this thing, they had said the median. It wasn't actually an existing series. I think they were going to make it for the purpose of updating the stress test. And then COVID happened, and finance was like, you know what? We're going to go do the CREA here, and we'll revisit this at some point in the future. But if you look at this is 5-year mortgage rates, and they are really going up. Like, I should have locked in a year ago. But the big one being in the last month, okay? Of course, everyone knows that the Bank of Canada did that big, they call it a jumbo interest rate increase, 50 basis points. But now check this out. If you subtract the current stress test, which is 5.25%, from that discounted 5-year rate, and you compare it to the original intent, which was a 200 basis point buffer, we're already, as of just a month ago, below that. And so here's something, when I say my spidey senses sometimes tingle, here's something to watch out for. If OSFI comes into your newsfeed one morning and says, hey, we're making this thing higher, because already they're sort of below where they kind of want it to sort of be linked to. Back in December, it was way up here at like 275 basis points. And I actually even said in our news release, it's like, don't move it yet, like let it converge, but it's converging very quickly right now. So keep an eye on this one. And here's another one for you. When I designed this on Friday, I had a screenshot from a Bloomberg terminal in here showing what the implied overnight rate for the next few meetings is, because the Bloomberg terminal can do that. But then I realized that was a major violation of our terms of use, that I can't show that in this slideshow. So this is just the scheduled interest rate announcements by the Bank of Canada. And I'm just going to tell you what the Bloomberg terminal said. So here was the April 13th meeting. They went up by 50 basis points. I expected that in June too. We looked at this Bloomberg terminal. You know what it said? It said that they're going to go up by 50 basis points in June and in July and in September. Now, that's in the future. That hasn't happened yet, and things could change if the markets react to what they've already done. they start to get some of the results that they're looking for. But I'm just telling you that this is what that Bloomberg Journal is pricing in right now. I couldn't believe it. Now, whether that means we get to a higher level than neutral eventually, or whether that just means we get there faster, that's certainly been the theme since the Bank of Canada started saying we're not going to move interest rates until 2023, and then it was maybe early in 2022, and then it was we're definitely going to do it in early 2022, and now we're going to do it really fast. So there's a theme there with interest rate hikes, and you've already seen what mortgage rates have done. So if you want to think about the impact on the housing market, and we forecast, I start to think about, we're not going to touch the brake, we're going to feather the brake, we're going to tap the brake, we're going to put the brakes on, and maybe we're going to slam the brakes on. We'll have to wait and see, but this is going to be the major theme of the next year, I think, for the housing market, is going to be the cost of borrowing money. Now, this is our Ontario home sales forecast. The two bars at the far end that are in dark blue are 2022 and 2023, down in both years from a record in 2021. That doesn't mean that we expect things to go down. It means that we expect things to reconverge on trend, particularly with, rising rates, expensive home prices, and and a lack of inventory. It all sort of holds together. When we published this a few months ago, I thought maybe this is a little bit low, and now with some of the interest rate developments, I think maybe that's about right, and we'll adjust as time goes on. Here's our Ontario annual average home price forecast. It looks like a hockey stick, and they are big increases, but percentage-wise, big numbers. As the numbers get bigger, you can have these percentages that are actually a lot of dollars. This is actually pretty conservative. I know I discussed this with Jason before about how, you look at a forecast like this for something to be up 20%, and oftentimes we'll get the comment that, of course, the CREA only thinks prices will go up. It's like, well, that's where they are today. So it's actually pretty conservative that we expect things to slow down big time and top out. But on an annual published chart like this, it doesn't look like that. So I have to take advantages like this for this kind of opportunity to show people it's like we're actually being really conservative here. And quite frankly, it's going to get a lot more expensive to borrow money unless that story changes. And so with that, I will stop my screen share, and I hope that was useful information.
Thank you so much, Sean. Hope you can stay for a few questions at the end of the session. I know our questions are blowing up right now. Lots of questions about a lot of things in today's session, but I'd like to invite Jason to join us now, and we'll give him the floor to talk about his insights into the GTA real estate market. Welcome, Jason.
Thank you very much, Chris. Can you see my screen now?
I can see it.
Full presenter view?
Yep, you're good to go.
All right, great. Okay, well, thanks very much to Sean, and I'm gonna touch on a lot of the similar concepts to what he brought up in terms of the overall Ontario market, but obviously we're gonna drill down into the Greater Toronto area. The first thing I want to point out is that realtors on this call today, as well as those that may be taking in this presentation at a later date, play a large role in both the buying and selling of residential real estate, not only in the GTA but certainly across Ontario as well. And so at the end of each year, we do public opinion polling in conjunction with Ipsos, and one of the things we ask is that if you're intending on making a purchase over the next year, do you intend on following through with that purchase using a realtor? And what we found over time is that that number has always hovered in and around the 80% mark. And I've always also said that in that 20% that say they're not, a lot of those people are likely pointed at the pre-construction sales center. And while they may feel that they're not going to be using a realtor initially, I would argue that a lot of those individuals as well end up taking advantage of a realtor services to help them negotiate that pre-construction transaction. We know that there's been a very strong relationship between the building community and the realtor community building up over time as well. And so, by and large, you play a very important role in the residential real estate space. And that's responsible for huge economic impacts spinning off into the GTA and broader Ontario and Canadian economy, both in terms of impact on GDP and in terms of job growth and in terms of revenues accruing to all three levels of government through related taxation. It's also important to point out, if you think about the traditional market area, if you will, of the GTA proper. And what we have seen though over time, especially as we've seen prices growing and people looking maybe a little bit further afield, and then on top of that, compounding that type of trend was the impact of the pandemic, where people are looking to move further afield to take advantage of more living space and what have you. That we have actually seen an increase in terms of the number of TRREB members who, more traditionally, say a decade ago, most of their transactions were situated within the GTA. We're starting to see people look further afield with their GTA realtor. And so, 2020, 2021, we're seeing, coming on a quarter of transactions that were reported by our members were taking place outside of the GTA proper. So looking more so in the surrounding Greater Golden Horseshoe municipalities. And that speaks again, number one, to a changing affordability dynamic. And as Sean mentioned earlier, if you're looking for traditional low-rise housing, whether it be detached or semis or towns, a lot of households have looked further afield outside of the GTA to find an affordable option in that case. And then obviously over the last couple of years, with more flexibility in the work environment, people have been looking further afield just because they're able to work virtually, work remotely, and perhaps are able to take on a larger property as a result. And so, jumping in, Sean showed, what we've seen over time in terms of Ontario transactions and Ontario pricing. And so through 2021, we saw a record level of transactions reported through TRREB's MLS system last year, and with, extremely tight market conditions. Sean was speaking to days on market and active listings. Well, days on market last year, for the most part, were being measured, months of inventory last year were being measured, not in terms of months anymore, but in terms of weeks or even days in some neighborhoods. So it's not surprising that we saw, strong double-digit price growth to a new record level last year. And we'll talk about our outlook for GTA pricing for 2021 or 2022 and beyond. But suffice to say, market conditions remain still quite tight, even though we are seeing certainly a transition in market conditions and market balance certainly unfolding over the last 6 weeks or so. And so let's start to think about kind of where we stand today versus say the last few years, and then move towards constructing what our outlook is for the remainder of 2022. And so this chart just sort of plots out on a monthly basis, the level of transactions. And you can really see, there's been different milestones that we've hit, both from a public policy perspective. Obviously, as we moved through 2017, 18, and 19, that was a period of time where we first had the psychological impact of the Fair Housing Plan and an initial tax on foreign buyers in the Greater Golden Horseshoe. And then obviously the OSFI stress test came online as well, and that certainly suppressed sales below the 2016 record. And then just as we were starting to see a bit of a rebound from the impact of the OSFI stress test, we obviously had the pandemic hit, and we saw sales drop to lows that we hadn't seen in many decades. But even more impressively, was the rebound, the ability of a lot of sectors of the economy to make that transition from the bricks and mortar workplace to the virtual workplace. And that gave people a lot of confidence, that they're going to be able to retain their employment. They're going to be able to sustain their level of income. And so we saw a fairly quick rebound then in home transactions. And obviously that was aided by the fact that we saw borrowing costs decline to record lows very, very quickly. And so we had that initial a recovery from the drop off in the pandemic, particularly in the second half of 2020 and first quarter of 2021. And then we moved kind of into a bit of a normalization period, which is sort of where we're sitting right now. And that's where I want to jump off into our outlook and think about the different factors that will impact the level of real estate transactions over the next year and even beyond into 2023. And so the first thing I want to talk about is per capita sales from an historic perspective. And so if you look at the orange line on this chart, that just shows, based on, historic norms and the level of population growth, where we'd expect to see home sales trending over the long term. And, generally speaking, you'll see the green line, which are actual sales, hovering in and around that line. But if it doesn't, if you kind of blow through that line, either to the high side or the low side, there's generally a compensation in the years to come. And so we're well above the per capita norm in terms of home sales as we move through the second half of 2020 and even more so in 2021, as we saw a record number of sales, over 120,000 deals last year. And so it makes sense then, given that people were pulling forward their decision to purchase a home over the last year and a half or so, there's only so large of a pool of willing home buyers in one given year. And so it makes sense just on that alone that we started to see a bit of a trend back towards that long-term norm, both towards the end of 2021 and certainly as we move through January, February, March of this year. And so just the fact that we're kind of we're sort of resetting or normalizing from above trend sales in the second half of 20 and all the way through 2021 for the most part, that has a bit of that will exert a little bit downward pressure in terms of the demand for ownership housing, and we are already starting to see that as we move through the first quarter of 2022. Now, thinking long term, however, and thinking about population growth and the demand for residential real estate, the population in the GTA and even broader Greater Golden Horseshoe, it doesn't grow but for immigration on net. And so as we move through the fourth quarter of 2020 and definitely even more so all the way through 2021, we start to see a rebound in immigration into Ontario, and certainly a lot of that immigration, a lot of that population growth was focused on the Greater Toronto area, and we're now seeing record levels of immigration flowing into Ontario, and that's expected to continue as we move through this year and even into 2023. And so that's an important factor to consider, and recognizing this, when we did our consumer polling at the end of last year in conjunction with Ipsos, we also added some additional questions focusing in on immigration and especially the home buying experience for newcomers to Canada. And so what we found is that 38% of homeowners that were polled in the Ipsos survey had immigrated to Canada at some point in time. And then what we found is that when we asked about home purchase intentions, we actually found that immigrant households were more likely than average to enter into a home purchase. And some of that has to do with the fact that people that are moving to Canada from other parts of the world, they didn't have that option for home ownership from where they are coming. And so that's been a major focus for newcomers to Canada for a long period of time. And I remember when I was back at CMHC as well, and studies were done both by CMHC and Statistics Canada, looking at sort of the journey of newcomer households to Canada, and certainly home ownership was always highlighted as a major goal for newcomers to Canada. So it makes sense then that when we do this type of polling, that we see intentions to buy are actually higher on average for newcomers, for immigrant households versus the population at large. And that's really important when you think about a metropolitan area like the GTA and the surrounding Greater Golden Horseshoe, because what that means is that as our population grows on the back of immigration, you're going to see this sustained demand for ownership housing over time. And so increased immigration, certainly over the long term, and even what we're seeing as we move through 2022 and into 2023, will certainly keep or will certainly promote the demand for ownership housing as we move forward. Now, on top of population growth, people need to have the ability to purchase and pay for a home over the long term through the use of a mortgage, because certainly the great majority of people who are purchasing a home in the GTA and GGH today are doing so through the use of a mortgage. And so you need to have a sustained employment, a sustained income in order to make those payments over time. And luckily, after a real fast spike upwards as a result of the initial impact of COVID-19, we saw borrowing costs drop off, we saw the unemployment rate trend lower quite quickly, and that again was the result of that quick transition from the bricks and mortar office to the home office for a lot of sectors of the economy, and especially when you think about breaking down the sectors of the economy that responded the quickest to that transition, it was average to above average income sectors, and those are the sectors of the economy that drive the demand for ownership housing. And so it's not surprising that as we saw the unemployment rate trend lower over time, we also saw the demand for ownership housing remain very, very strong. And the expectation is that as we move through this year and into 2023, we're going to continue to see relative strength in the labor market. We're also starting to see those sectors of the economy that were hit hardest by COVID-19, so hospitality, tourism, etc. Those sectors of the economy also are improving as well. And I'll talk about first-time buyer intentions later, but we have seen an improvement in that segment with younger households, and particularly in the city of Toronto. And there is a correlation between first-time buyers and those segments of the economy. But I want to touch on what Sean was talking about in his presentation as well, and that's the impact of borrowing costs. And we really have seen over the last 3 months, 2 to 3 months, a real strong upward trend in borrowing costs. And this is just shown slightly different on a line chart instead of a bar chart. The fixed contract mortgage rates that have been reported by StatsCan since 2013. And there's no doubt about it that if you're looking now at a contract rate, average contract rate, a little less than 4%, that we're breaching that 5.25% threshold that was prescribed by OSFI. And so if you're thinking about what your clients today are getting in terms of a contract rate versus what they have to qualify at, that's really ramped up very quickly, and we are starting to see the impact of that in home sales. I mean, we saw it as we moved through March. Certainly, we didn't see the same upward trend in home sales that we'd expect to see just on a seasonal basis, and certainly as we're moving through April, I'm sure a lot of you agree that we are starting to see, or we have seen, further moderation in those home sales. And it makes sense then, and this is a bit of a messy chart, but if you look at the right-hand side of this slide, what we see is over time, rate tightening cycles like the one that we're certainly well into now have an impact on average on home sales. And over time, the average sales decline has been around 11%. It could be more this time around, and that's going to correspond also with the demographic components that I talked about earlier in my presentation, but certainly we are expecting to see slower sales this year, and a lot of that's going to be on the back of higher borrowing costs. But what we also see is that over time, that dip in transactions isn't sustained, and you do start to see a rebound in home sales back to the pre-tightening period. And especially when you think about the GTA and the Greater Golden Horseshoe, a lot of that, of course, is on the back of continued population growth. We create jobs across a number of different sectors of the economy, and we attract people from all around the world to live here as a result, and all those people need a place to live. And so borrowing costs will certainly exert downward pressure on the demand for ownership housing. The final thing I want to talk to on the demand side before we turn to supply and price is public policy changes. We had an election last year from a federal perspective, and we're looking down the barrel of a provincial election and a municipal elections across Ontario. And so it's important to think about housing, through the lens of public policy as well. And we have seen certainly a renewed focus on foreign buyers. And I'll just reiterate, back in 2017, we saw the Fair Housing Plan come into effect, and obviously the Cadillac or premier piece of legislation within that plan was a tax on foreign buyers. And whether you're talking about from the Ontario perspective and ratcheting up the rate of that tax, or whether you're talking about from the federal perspective and sort of banning some components of what we call quote unquote foreign buying, we've received a lot of questions over the last month or so as to whether that's going to have a real impact on the housing market. And I'd certainly argue that if you're asking me, well, on balance, what do you think is going to have the greatest impact on the demand for ownership housing? Is it higher borrowing costs, or is it stricter regulations around foreign buying? I'm certainly leaning towards the borrowing cost side, and for no other reason than we're really not seeing a lot of transactions that even before the changes that have taken place over the last month or so that were subject to the non-resident speculation tax in Ontario. I mean, you're talking about a few hundred transactions a month, less than 1% of overall market activity. And so even if you strip all of those transactions out of the marketplace, you're still experiencing very tight market conditions. And so again, while it's an issue that makes headlines, and it's an issue that's talked a lot about from a public policy perspective, it's really sort of nibbling around the edges when you're thinking about market conditions and the demand for ownership housing in the GTA. Also wanted to just touch on speculative activity in general, because we hear about speculation in terms of foreign buyers. We also hear about just speculation in general. People purchasing a home, prices are going up rapidly, so they're purchasing and flipping those homes and what have you. And so this chart just looks at the number and share of properties on TRREB's MLS system that were purchased and then sold again within 12 months. And you're only talking about a handful, a few thousand transactions that sort of fall into that category from one year to the next. And certainly we saw that edging up a little bit over the last couple of years, and that only makes sense given that price growth has been extremely strong. Yet we haven't got back to levels that we were seeing, say 2016, 2017. And again, if you're to strip all of these types of transactions out of the marketplace and look at where market conditions are standing, you'd still be looking at months of inventory that supported very strong price growth. And so foreign buying activity, there's a little bit of it at the edges. Speculative activity where you're seeing homes sell multiple times within a shorter period of time, it's out there. But it's not at levels that sometimes are estimated or anticipated in some circles. And so again, from a public policy perspective, we already had a foreign buyers tax in place. From a speculation perspective, thinking about where public policy could go over the next year as we're moving towards a couple different elections. By and large, that probably has a sort of a neutral impact at best on the demand for ownership housing. The thing we're really going to have to keep an eye on and look at is what the trajectory is for borrowing costs and how that's going to impact affordability over time, and how we're going to see OSFI react to that in terms of their ceiling and what have you. And so definitely forecasting a lower number of sales as we move through 2022 compared to what we saw in 2021. And I agree with Sean, there likely will be somewhat of a hangover as we move into 2023 as well from an affordability perspective in a significantly higher interest rate environment. Offsetting that to a certain degree, of course, will be the fact that the population continues to grow strongly, and we continue to see household formation at very high levels in the GTA and GGH. And again, all of these households are going to require a place to live. And if they decide not to purchase right away, then they're going to be looking at a rental market that will remain very tight as well. And so just sort of breaking down buying activity into a few different categories before I turn to supply and sort of overall market conditions, I want to touch on first-time buyers a little bit as well, because that was certainly a segment of the market that was sort of receding over the last few years, just as affordability became more of an issue, as we were seeing tight market conditions drive up home price and seeing an acceleration in price growth. But I will point out that compared to the fall of 2020 versus what we saw in the fall of 2021 when we did this survey, was that we did see an uptick in first-time buying intentions, particularly within the 416 area code. And we really felt that fairly quickly as we moved through the latter half of last year, and certainly even the first quarter of this year, where the demand for condominium apartments within the GTA, and certainly drilling down to the city of Toronto, has remained quite strong. And so whereas that segment of the market was initially very hard hit as we moved through the initial phase of COVID-19, and it was slower to recover, seeing more first-time buyers come back into the market and those buying intentions pick up a little bit, that did support recovery in the condominium apartment market, and it's really tightened up over the last couple of quarters. And so, thinking about what people are going to purchase, however, it is important to note, and this gets back to some comments that Sean made in his presentation as well, is that a lot of likely home purchases are still focused on those low-rise segments of the market. So whether we're talking about detached home types, semis, and towns, that's where you're still seeing the lion's share of purchase intentions pointed. And so, when you're thinking about housing supply, it's not just housing supply in the aggregate, but it's, are you supplying the type of homes that people want to purchase? And I want to build upon a comment Sean made too around condominium apartments. Because he was speaking of it from a pure ownership perspective. It's also important to remember that when you hear people say, well, look, we're building enough homes, look at the aggregate or total number of completions from 1 year to the next. And even if you say, look, at a lot of these are condos and they don't necessarily fit what some households are looking to purchase, there's an additional piece. Because a lot of those condominium apartments on net that are completed from 1 year to the next actually find their way into the rental market. So they're purchased by investors at the pre-construction sales center, and upon completion, these investors bring them to bear on the rental market. So there's thousands of units that complete each year that on paper look like they're ownership units, but they're actually make their way into the rental market. If you look over the last decade, the great majority of new rental units that have come online in the Greater Toronto Area have actually been investor-held condominium apartment units. And so even when you look at those aggregate completion numbers, they're actually lower than that in terms of the number of units, number of ownership housing units that are actually maybe available for sale or maybe accounted for by owner occupiers. So that's another important piece of the puzzle to consider when you're thinking about the supply of ownership housing coming into the marketplace. And just finally, before we get to supply, some of the reasons why people are saying they were not going to purchase a home over the last year, according to our Ipsos polling, and not a lot of surprise there, but I mean, you either have people that just said, look, I have a home, I'm happy to remain in it. This touches on also a point that Nicole made earlier as well. There's a lot of people that said, look, I might like to list my home for sale and purchase something different, but the market's so tight out there, I'm not sure I'm going to find what I want to purchase, and so I'm going to undertake renovations as well. And so that's been a major factor. The pandemic notwithstanding, you've just had people as well that have decided, look, I'm going to purchase or I'm not going to purchase a home. I'm not going to list my home for sale. I'm going to renovate it instead. I'm going to make it larger. I'm going to improve, what I have inside the existing walls, whatever the case may be. And that actually serves to, pull listings that otherwise would have come into the marketplace. It pulls those out of the market as well, because those people have made substantial investments and now they're not going to move for the next 5 or 10 years. And so, we've talked a lot about the demand side. We've talked a lot about, the impact of borrowing costs and, what they've had already and are set to have over the next year. But the point still remains that, when we turn the page from 2021 into 2022, we're seeing a record low in terms of active listings on TRREB's MLS system. Just a little bit more than 3,000 active listings were on our system in December 2021, lowest level in history. And so if you think about, you know, how much is that going to improve over the next couple of years, our polling suggests not very much. In fact, you know, we're seeing intentions to list flatline to even trending a little bit lower. And we're seeing that so far this year when you look at new listings. So sales are off and have been off as we move through the first 4 months of this year, but so too are new listings. And so while we are seeing a little bit of relief in terms of market conditions, you know, supply still remains a major problem in this marketplace. And so if you think, however, about people that are thinking about listing their home, you know, you do have people that, you know, are saying, look, I can get a good price for my home right now. I want to move into a larger house. I've made money on paper and I want to convert that into real dollars. And we see these same, you know, types of responses each year. And when you look at this off the top, you'd say, well, that suggests to me that, you know, because of the strong price growth we're seeing, you know, maybe we will start to see a rebound in listings, but it hasn't necessarily translated. And I would argue that the main reason why it hasn't translated is we remain in somewhat of a vicious circle where there's a lot of people out there, given more balanced market conditions, would say, look, I'm going to sell the home that I'm in, and then we're going to purchase something that better meets our needs. But then when they start sort of poking around the market, and a lot of them may be working with you as realtors to look at what their options may be in the marketplace, they see that, you know what, there's not a lot out here that I'd be willing to purchase. And so while my intention in a perfect world would be to list my home for sale, in reality, it doesn't seem like that much of an option. So I'm going to stay where I am, or maybe I'm going to do some renovations instead. And this is that vicious circle that's been playing itself out over the last number of years. And so the bottom line is that if you look at months of inventory, even though we have seen a bit of a movement to more balance in the marketplace over the last few months, you're still seeing months of inventory remain extremely low in the Greater Toronto area, and I'd argue that that's the case for a lot of municipalities making up the broader Greater Golden Horseshoe as well. And so, you know, while we're expecting to see a slower pace of price growth as we move forward, you know, we're not expecting to see you know, a price decline. And in fact, this year we're still expecting to see, you know, double-digit price growth in terms of the average selling price this year. I'm not sure what you could see in your presentation. There we go. I kind of froze up there for a moment, but you know, we are expecting to see again strong price growth this year in the lower double digits. And that does suggest that we will see a bit of a downward trend in terms of the average selling price on a month-over-month basis as we move through the second half of 2022, but still up strongly in comparison to what we saw in 2021. And that just gets back to the fact that, you know, market conditions, even with sales dipping, remain tight enough to support very strong price growth from an historic perspective. So with that, I'll stop sharing my screen and kick it back to Chris, and I'm happy to answer questions.
Thank you so much, Jason. That was excellent presentation by both you and Sean. And I'd like to welcome Sean back on the screen. We do have a couple questions. So one question goes back, and when we did this, we did a similar presentation a year ago. And I remember, Sean, your presentation, I think it was, so the big trend after that dip in March was people were moving to mountains, waterfront, and rural areas out of the urban center. And that was right across the country. Like obviously Ontario, we don't have, you know, a lot of mountains, but out west, you know, people were looking for their remote cabins, etc. And we had a lot of people move outside of urban centers in the GTA. I know North Bay was a hot market for a while. Now that the pandemic restrictions are lifting, and do you foresee people, you know, at some point wanting to move back potentially closer to work to the urban centers, or do you think that trend is here to stay?
I don't foresee them wanting to, but so we'll see if they get called back in. I've been saying, you know, I think people are realizing that the idea of office work is something from the 1980s with typewriters and filing cabinets, and that information workers don't need to do that. So I think that more people would be like, you know what, I'm just going to stay in North Bay and get a job here. We'll see, but certainly there will be some churn back in the other direction. But you know, it's really tough to move out of a city like that and then move back in and be able to afford it. If you've got to re-originate your mortgage these days, that's going to be tough to do because it's looking like rates are going to go up big time. So I think people might find themselves staying where they are more than they were.
Maybe I'll just build on that a little bit too, because you know, I talked about our Ipsos polling and that we did in conjunction with our market outlook. We also did a joint study with the Toronto Region Board of Trade, and it was looking at exactly that sort of, you know, what we expect to see for back to work. And it was an interesting study because, you know, we did some polling of existing homeowners within the Greater Golden Horseshoe, but we also through the Board of Trade, they interviewed executives, particularly executives associated with firms located in the downtown core, and it does appear that there will be, you know, some sort of balancing act. The expectation is that you know, people are going to be returning to work, and we've already seen that trend start to unfold over the last few months, but perhaps not on a, you know, a 5-day-a-week type of schedule. And so there is going to be that sort of balancing act between you know, coming into the office and getting back to, you know, some sort of, you know, pre-COVID normalcy, but at the same time recognizing the fact that, you know, people have made, you know, decisions and have also proven that they can, you know, work remotely as well and still be productive and what have you. And so, you know, we're still kind of in this sort of transition period, and you know, it's not like COVID cases are going away and what have you as well. And so I think there's still a little bit of uncertainty, but I think there is going to be, you know, a transition to some sort of hybrid model, and it'll be an important thing to watch in terms of, you know, what that does in terms of the demand for housing as we move more so into 2023, I think, and you know, that I think that'll become a sort of a bigger story and sort of area of inquiry as we, you know, say goodbye to 2022 and move into 23 as well.
And a lot of us can't fit into our office clothes yet.
Yeah.
I'm in that boat. And you look at what Nicole commented on the building permit and with people working from home and the transition, but I think that was a big driver of those. They're sheds, but you know, some of these sheds that are out there are, you could live in them, right? They're like little tiny homes, and people needing to get out of the house to work, and perhaps that's a new office trend coming. Another question, you both touched on, obviously, the interest rates, which you both believe is probably the most significant factor in public policy. And Jason touched on the foreign buyers. But one question came in on, what do you think the impact of the opt-out of the blind bidding? I believe it's just the Ontario that has done that. Will that have an impact on home prices, do you think?
I can comment on that.
Yeah.
I don't want to get myself into trouble here, but CREA did release a white paper on this that said exactly what I thought it would say, which is it's going to have no impact at all, because like everyone knows, like, you know, like we're working with experts here. You know what that market price is going to be. Doesn't matter what the listing price is. You know how many offers there are. You got a good idea. If anything, like a more transparent bidding process will just let the other 4 offers know that they're about to lose, and then they're going to, you know, raise their offer, which is what an auction is. So I think it's a red herring, or it's tilting at windmills. It's finding another boogeyman, that as opposed to just, we need to build way more housing. And so this one's going to not work too.
But yeah, I mean, when you're talking about multiple offers, you know, putting aside how you make those offers, you're in a situation where there's multiple offers and everyone's talking about it because there's a lot of people looking to purchase, you know, a constrained supply of homes available in the marketplace. And if conditions were more balanced, you wouldn't be seeing the same level of price appreciation because people would have options. They say, look, I missed out on this one, but I'm not worried about it because there's homes A, B, and C down the street. Well, in a lot of neighborhoods still, you know, throughout the GTA, there is no B, C, or D. There's A, and that's it. And a lot of people are very interested in purchasing home A, you know, regardless of what the mechanism through which you'd be making those offers.
Yeah, great. We got another question here of, so what group of home buyers will the increased borrowing costs most affect?
People that need to borrow more money. So one of the interesting things about the current state that we're in, if you think back to my demographic charts, is we've never had so many people that are homeowners as we have right now in middle age, right? And they've been making a fortune on those places. And so that comes back to your question about renovations. How can people put these $100,000 pools in? It's because their houses have been making them $100,000 a year tax-free for the last 5 years. So, and there's a lot more of them. So it's very much an inequality thing about haves and have-nots. And that's why you're seeing so many people who own property already buying additional property, because they can leverage that equity, whereas young people can't even get the one place. And so that's who it's going to impact the most. And so in a sense, you could still get more churn in the market than you would have in a past tightening cycle, because the number of first-time buyers is relatively smaller compared to the overall stock of people who are housing rich, who can play musical chairs. So you won't see as much of a slowdown. But on the price side, you could really see things stop near where they are, because young people just are not going to be able to afford that. They're not going to pass the stress test. They're not. But there's more people out there than there were in the past to buy those places if they can't. So it's just going to be a matter of looking at the census data for housing when it comes out in September, and you're going to see that the home ownership rate for people in their 30s is way down, and it's going to go down more.
Yeah, I think the one thing to watch too is that there is an impact on the supply side as well. Like if you don't feel you're going to be able to list your home for sale and say move into something larger because you don't want to take that extra sort of hit from a payment perspective, that'll influence the supply side as well. So I think it's going to be interesting to see sort of how that dynamic unfolds. I mean, right now we're still experiencing really tight market conditions, even with sales dropping off. And part of the reason is that listings have also dropped off. Like we're not in a situation where you're seeing a whole bunch of people rushing to sell their home. Because we talked about other factors influencing the ownership market, and you're seeing a strong labor market, and so there's not that necessarily impetus to list your home for sale, and so you're not seeing a double whammy of sales dipping because of affordability and higher borrowing costs. You're seeing listings trend lower as well. And if you had people that are saying, well, look at maybe we'll take advantage of equity gains and borrow some more and move into something different, that type of activity may go on hold, but it sees actual listings drop off as well. And so it's that interplay between sales and listings that we really have to watch over the next year or so.
Great. Well, that's it for the Q&A period. I'd like to thank you both for great presentations and great discussions. As we were chatting with Nicole earlier, hopefully next time we do this, we can get you back and maybe we can do a live event somewhere and get people together. So with that, I thank you again and have a great rest of your day, and hope you guys both stay well.
Thanks very much.
Thanks, guys.
Thanks, everyone.
So as we wrap up today, I'd like to encourage you, for those of you who haven't attended one of our free webinars, to consider it. I know there was a ton of questions in the chat about our AVM product. So we do have a webinar on that. And for those of you not familiar with it, again, this is a real-time market value estimate that's updated every week in Ontario. It started 20 years ago when GE came to the Ontario market looking to compete in the mortgage insurance industry. So we have 20 years of AVM experience. And, for those of you dealing with who need historic estimates like our Property Line platform, you can go back that 20 years, select the month and year, and get the historic market value estimate. So more details can be found on that in our AVM webinar. And we have 5 webinars currently running. And we're adding a new technical webinar that'll focus just mainly on the Ontario's property tax and assessment system and how it works. So you'll learn about that in the next few weeks. We also schedule 2 webinars throughout a week throughout the month, and our schedule and registration details can be found on MPAC.ca. But our team really likes doing customized webinars as well. So we will do a custom webinar or an in-person training session for your brokerage. What's nice about these is they're more interactive. If it's a webinar, we use a different platform. Everyone can turn their cameras on, ask live questions. And as things are opening up, I know our team's, welcome to come out to your offices and do live sessions. So if you're interested in booking that, you can go to our website, or you can email us directly at propertyline@mpac.ca. Maybe someone could put that in the chat there if you want to schedule an in-person event or customized event. Our team is happy to work with you in setting that up. You'll also see in the handouts, we've got our May schedule posted that you can download. It's on the right-hand side of your window. And you can also register at mpac.ca in our Realtor Training session. You'll also want to make sure you're on our mailing list to learn about upcoming webinars, invitation to special events like this. And we're also going to be sending out our latest property market insights, like the building permit data Nicole shared with us today. I'd like to thank everyone on our team for putting this session together. I hope everyone found it valuable. Thank you for joining us. Again, I'd like to thank the presenters, Nicole, Sean, and Jason. Again, this was our second special event for Ontario Realtors, and we'd love to know what you thought of it, and if you're interested in seeing more offerings like this in the future. With that, please take a moment. There's a short survey as you exit today's event, and share your feedback to help us serve you better. We're also going to be sending a recording of today's session in the next few days, and we will post the PowerPoint, the presentations that both Sean, Jason, and Nicole gave earlier. Any questions you have, please feel welcome to reach out to us at propertyline@mpac.ca, and we can get back to you. And with that, I'd sign off and thank you for taking part of this event, and enjoy the rest of your day. Take care.